When the whole market gets slammed like we saw today, that can create buying opportunities in the stocks of companies we know are actually doing quite well because they recently reported. Take ServiceNow, the cloud-based software firm that helps corporate information technology departments develop their own internal applications while also providing enterprise software that can manage and automate various functions in a given company's human resources, legal, finance, security fields, also facilities management, marketing departments. Along with many other tech stocks, ServiceNow got hammered today, plunged $1.84, 2.45% down. No real news. That's important because it means that much of the stock's move that it put on after it reported a fabulous quarter has now been erased. While the stock is up 8.3% since we last spoke to the CEO roughly 3 months ago, it's still down 15% year-to-date. Most because it still hasn't fully recovered from the drubbing in the all high-flying cloud computing stocks that happened in January and February. Yet last week, ServiceNow reported a terrific 5-cent earnings beat off a 10-cent basis, higher than expected revenue, up 38% year-over-year, not to mention a monster 33% increase in billings and a 45% gain in subscription revenue, which is really crucial. It's what I use to gauge things. On top of that, the company gave a stronger than expected forecast for the next quarter. Management raised their full-year guidance. In short, we know ServiceNow is doing well. That makes this kind of stock maybe one that you want to buy into the weakness. But it won't prevent ServiceNow from going still lower if the whole market, and tech in particular, continues to get crushed. So let's take a closer look at Frank Slootman, the president and CEO of ServiceNow, find out more about how his company's doing and where it is headed. Mr. Slootman, welcome back to Mad Money.
Good to be with you, Jim.
Okay, Frank, you added, last time we saw you had 249 customers that were paying more than $1 million. Now you have 272. That's a very short time to add that many customers. Give us a sense of who you're adding and how you're able to do so many in such a short period of time.
Yeah, that's actually a very key metric that we report every quarter, Jim. And the reason is we laid out that $4 billion revenue target for 2020. So this gives our investor audience an opportunity to monitor our progress to that goal because our entire investor thesis really hinges on us reaching that number, and then you apply a reasonable multiple on that, and you can figure out what you got to look forward to in terms of stock price.
Well, we know that, I mean, that's kind of what Salesforce taught us. I know that there's a tit for tat comment, and you don't go tit for tat with Salesforce, but it is the kind of analysis. And when I come back and say what I used to say to Mark Benioff, which is, wait a second, you are in a huge percentage. 272 customers paying you more than $1 million. You've landed 26 new Global 2000. I mean, you got 30% of the Global 2000. What makes you think you can get more than that? That's a lot already.
It is a lot already, but you look at how far along we are in Europe and Asia. And by the way, a third of those logos actually came out of Asia Pacific this quarter, where we're still very underpenetrated. So we view it actually as having really a ton of opportunity out there.
Okay, I was looking at some of your customers. You know, I always try to make it come alive. We talked about Zillow last time. I see that Diageo's used you to be able to make sure that they service customers right. I'm a big customer of Diageo because of Don Julio. I am a huge seller of Don Julio tequila. What does ServiceNow bring to Diageo that makes it so that I am a more seamless customer for Don Julio?
Yeah, so for Diageo, this goes back a couple of years. We did a massive company-wide IT transformation with them. I mean, they're very typical for the type of projects that we do for large consumer goods enterprises, 30,000 employees, 180 countries. And it's a complete reset on how they're running IT and how IT is consumed as a service by all their employees in all those countries.
So theoretically, someone might have been doing something by phone or by email to another email to a server, back to an email, and this is now more streamlined because they know what the customer might want ahead of it?
Yes, it's really externalizing that service experience. People can access service from their devices, and then a very high degree of automated provisioning. So IT has an opportunity really to compress the cost base around providing those services.
Okay, last time you were on, I asked a question about whether you were competing against Workday, and you said, and I quote, that many of our customers deploy ServiceNow and Workday at very good value added. And then you said this, and I should have asked you a follow-up, but I ran out of time. Workday really manages the records of human resources, where we tend to manage the work of human resources. And that kind of stymied me. What's the difference between the work and the records?
Well, the work of HR really relates to all the employees coming to HR on a daily basis and having issues with a move or a pay raise or a problem with their paycheck. There's a huge workload that comes into HR departments, just people needing information and needing help. That doesn't have a whole lot to do with managing the records of HR. I mean, a new employee hires on, we need to create a record and an accurate definition of that employee in the system, for compliance purposes, for payroll purposes, and so on. We don't do that. That's what Workday does. But the workload of HR on a day-to-day basis in terms of serving the employees of the enterprise or the institution, that ends up on our doorstep.
All right, good. I'm glad I got that cleared up. Now, Oppenheimer, which talked to, I just picked one of these great research firms, that they've got a market performing. They said something, I didn't see this when I read through the quarter, but maybe I'm looking at it wrong. They say that there is some renewal slippage and slowing in North American growth, and a sign of moderating beat and raise magnitude. We talked about beat and raise when you last time were on and how important it is. I didn't see those. Am I not looking in the right spot?
No, I'm not sure what they're talking about. It was a very strong quarter. There was indeed there was about $6 million of billings that jumped from June 30th to July 1st. And these things happen. Sometimes purchasing departments run out of time. Those things are completely anomalous because they close almost immediately in the next quarter. So that's just pure noise. Sometimes people are just too focused, looking for inflections on a very short-term basis where they have really no bearing on the longer-term investment thesis. And I think we pointed that out during all the callbacks, and I think investors mostly got past that.
Yep. Now, last question. I use the metric of how many new customers. I like to use when a young company's doing what you're doing, operating cash flow. It looked very positive, which it didn't necessarily have to be. Rather than use the earnings or or actually using the non-GAAP earnings, is cash flow being positive? Is that something you want to maintain the whole time you get towards your 2020 projection?
Yeah, absolutely. We've given very specific guidance, not so much to operating cash flow, but free cash flow, which for us is a much more important metric. ServiceNow is a very unique combination of scale, growth, and cash flow, and I think that really sets us apart from the pack.
All right, excellent. Frank Slootman, President and CEO of ServiceNow, has the highest growth of all the companies that come on the show. Thank you so much, sir.
Thanks, Jim.
You want high growth, okay, in the cloud. This company has it. If you don't, well, you know what? We've got stocks like Microsoft. We've got stocks like HPE. We can choose what's right for you. Mad Money's back in. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.